Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so let me get this sucker out of the way. Daily chart. Green line is your daily mid-band. They tested it yesterday with that move down to 16 quarter in the Globex. They never went back in RTH really to test it. They did the 27s once, but that's about it. So that right now is acting as the low. And that's the low that's going to have to get dealt with today if the bears are going to have any chance to progress the rest of the week to the downside. We have FOMC today at 2 o'clock, so there should be plenty of vol, especially from 2 to 4, once we figure out what the reaction is going to be to the numbers. Remember what I always tell you. Do not game the Fed. Do not walk in at 158 and feel like because you read Barron's this weekend and you watch Wall Street Week for the 37th week in a row, that you know which way the reaction is going to be to some gigantic volatile number. When you trade like that, what tends to happen is, if you're right, you tend to dump it too fast and just feel, a sense of, vindication on the outside and knowing that you got away with playing in traffic on the inside. If you're wrong, then what you're going to do is, the chances are you're not going to respect risk, because this trade is about you being right about the economic reaction to a report versus you trading price and risk. And that's when people do really stupid stuff with their account, like add and add and add. And then at 4 o'clock, even though the market has gone in direction A, you thought and still continue to feel that the market should go in direction B. So now, what was supposed to be a fun little trade at 2 o'clock to see if you could catch the direction of the Fed, you are now embroiled in some massive positional swing trade shit show that you're going to have to carry around, into Christmas. Happens all the time. The better way to do it, the way we do it in the room, is let them come out with a report. It's going to create a range to the upside and the downside. You're either going to create higher lows or lower highs relative to that range. Chances are then you either break out or you break down. And then you're trading knowing where risk is. Works good for us. And it's better than flipping a coin at 1:58 in the afternoon. Hourly charts. That's my 2 cents on trading the Fed. Haven't given that speech in a while. So look, we had some compression Sunday into Monday. We had some expansion yesterday, Globex. We were pretty much range bound for most of yesterday. They had they started to bring it back. They did as high as 43. Then there were some headlines out about whether the tariffs were on or the tariffs were off. They whipped price down to 33, and then we spent most of the day jammed between that reaction high and that reaction low that came at about 11 a.m. Eastern time. They spiked it up off of the Europe Open to 43. They took it back down from there to 31 quarter. So we're still kind of jammed in that range. I wouldn't be surprised if it stayed pretty close to the vest this morning into 2 o'clock, and then we'll figure out what the Fed wants to do from there. So you've got the 9-day at 26. Weekly pivot remains 24.67. Daily mid-band 22. Your hourly mid, jammed in there right at 35. So any down push off the open is going to have to deal with 22 to 26. The upside, 43 is the deal. All right. Everybody have a fantastic day. Trade them well. Be careful around 2 o'clock. Come check out the room, and I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.